Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So today, you're gonna go home. It's gonna be one of those days where your wife, your friend, your mom, your dad, your aunt, your uncle are gonna be like, oh my goodness, you must have had the best day ever, because of the headlines they're gonna be reading. Multi-month highs, multi-year highs. You know, stock market on fire, NASDAQ 3,000, Dow 13,000, you name it, it's gonna be out there. Now, I want to just backtrack a little bit. This is not going to be a recap to chess beat. This isn't going to be a rah, rah, rah recap. It's just going to be a recap saying a few things that have transpired and that have gone on. And if you're looking at this site, or if you're a member of the virtual trade floor, or if you're just educating yourself anywhere across the board, you have to be excited and happy and proud of yourself. There are a lot of people that have mismanaged their funds, that have gotten hurt by the stock market and said, I'm not looking at the stock market anymore. No way. I'll never do it again. Or people who it was easy to get hurt. You had the tech bubble, you had the financial crisis, you had a lot of different things that took place that definitely could have hurt you if you didn't maneuver it the right way. But if you didn't take accountability into your own hands and you didn't learn how to approach the market with a plan, you're never gonna get anywhere. I sent out a tweet into the Twitter sphere, and I said, 401k people who every month put money in their 401k, get it matched, or just put it every month and buy an S&P fund, which is what I've recommended many times for anyone in their 20s and 30s and even 40s. You're happy, okay? If like my wife, for instance, I talk about different time frames because not everyone's a professional trader. She's 35 years old. She's been contributing since she's, I think, 29, and she is net a lot higher. And the market has made her money because she's been contributing every single month. Okay, as far as my son, 3.5 years old, a 529B plan. If you have one for your son, there are ways to put money in the market, have it work for you, have a long-term plan, and you can make money. Okay, so those that actually approach the market with a plan, that don't even want to learn chart patterns, learn technical analysis, they're somewhat getting rewarded. They deserve to go home, read the newspaper, and say, wow, that's cool, okay? And then you have those who've been maneuvering the market for the last decade, those who have side jobs, those who read Investors Business Daily, those that use sites like T3 or The Street or Minionville or MarketWatch, whatever site you use. You're learning how to read chart patterns and learning how to use macro setups in order to potentially trade ranges. As we know, within the last 10 years, or the last 14 years, the S&P has been in a range, but within that range, we've had numerous stocks make historic moves. Stocks like an Apple go up a few thousand%, a Baidu, an Amazon, timing the market bottom in the financials, sometimes the ags, or there's been groups that make you a lot of money. Almost the same way for the last decade, Microsoft hasn't made you a dime, but if you timed it into December, you're up a nice percentage. But all in all, there are time periods that everything's different. So for that decade or that 14 years, you haven't been able to really get rewarded by being a cost average every month investor, potentially like if you maybe started 20 years ago, or if you were a baby boomer, and then you picked you picked spots or did whatever. But anyway, you're at least you're approaching the market and you're trying to figure out how to add cash flow to your life. You're trying to figure out whether or not you could be a doctor, a lawyer, a gym teacher, a policeman, and also navigate your portfolio, 5 times a week or 5 times a month, and catch some stocks that act well, that potentially you like their product, you like their proprietary product, and you're in alpha-seeking situations. Or you're a professional trader. You've been doing this for 2 years, 5 years, a decade, whatever it is, and you're learning every day and you're growing every day and you're trying to continue to build on your strengths and get rid of your weaknesses. Because today, on that news, when I'm like, oh, 401k guys are happy, 529Bs are happy, stock pickers are happy, active traders are happy because we're getting setups, we're getting situations across the board. Everyone's like, that's a huge sell signal. It's not really a sell signal. It's just, I just want people to be proud of the work that they've done to approach the market with a plan to maneuver it correctly. And yes, as a trader, do you ever buy excitement? No. You sell it. you sell excitement, and you embrace volatility because no one else is trained how to do that. And that's what we try and train you here and educate you here to sell into the parabolic move or into the excitement. And then during the times of volatility, during the times of a pullback, you embrace it and you see what's showing relative strength so you know what to go with during the next up move, which sort of took place over the course of the past 2 weeks because we did have a 25% retracement from the highs. And if you knew how to measure that and said, wow, we held a 25% retracement, that's a strong market. You didn't really get scared if you were a macro investor. And then if you wanted to switch gears from going from short to flat, or from let me see and start putting on positions, and then maximizing or making some in the last 4 or 5 days, you did it. So I'm going to take a little trip down memory lane. And what you have to do is you have to figure out how you approached it. If you were stubborn, if you had, if you had a plan and you didn't follow it, if you didn't use your time frame analysis the right way, and if you weren't objective because of opinions. So I'm going to walk through it because I've tried to do it every single day, and those in our site have been able to be inundated with the thoughts of all of our content providers, including me, Mark, Mike Lee, Andreas. I'm not going to name everyone, but we've all had a big an approach to the market, and those who like to take multiple positions and try and trend shade, which I wasn't able to do years back. Hopefully we've held your hand through what has been a really good move from not only the October 4th, where we came out, 4 days later, and you go to the site, you see on Bloomberg, I'm like, there's a 75% chance the low of the year is in, to the December 20th, followed through an IBD and that gap and go that put most of us, or me and Mark at least, into a portfolio approach plan where you could have made money as an active trader, but also as a momentum trend watcher. So let's backtrack here a little bit and go to the chart. So here is a chart of the S&P. Here is that October 4th low. We've talked about it many times. You can look in the media, you could Google it, do whatever you want to do. On this day, we said it was the most important day of the year. It was a day that the market tried to break below this really important support, reverse, trapped the shorts, and had a pretty explosive move all the way to 1292. And then, fast forward a little bit, here's a higher low, and then here's that macro trend that has not even been tested yet. And then, a new trend, a new situation in the market, a new speed of the market, because the market changes every few months or every few weeks sometimes, but now it's been a few months. This was that December 20th gap and go. This was that descending trend line that broke to the upside right here. And then here is a more macro one when you could have added to it. And then what do? We followed the 10-day moving average for a good, month before testing it for 2 days, and then took it back. Then went all the way again. Then we tested it a few times and built that floor at 1440. Then finally, a small outside day, closed below the 10-day. Now, here, this is very important now, especially if you're a short-term trader, especially if you're a hedge fund, especially if you're, for someone who, either could be objective or have opinions, someone who could have been put out of business, someone who could have made a little, lost a little. There was a lot of different ways to do this. So if you look back on this day, okay, go back to the chart, you will see this was the day we closed below the 10-day moving average. This was the day I went short. Again, this is just, if you're a member of this site, you've been following this storybook. It's like a movie, okay? So here's where you got short, okay, into this down move. This is where, I basically covered my net short position. It was probably the only 2 days. Maybe I was net short one other time in here or 2 other times small. This was the only time I was net short, and the only reason why is because we closed below the 10-day, and I thought this momentum trend was in jeopardy, and I didn't know exactly what the pullback would be. And then you had this 2-day down move. So I said, okay, here we are from as high as 1378 down to 1340. This was one of the areas that we outlined. Why? Not because it just took it out of the clear blue. I did it because this was a nice floor back from February, 1440. And this is where we held. Okay? On this day also, actually, that's when I took a little LVS and had some longs, and you had a little bit of an inside day. And then this is, before we get even to here, this is what's important. Okay? Some people would have thought we could have tested, all right, at the time it was the 50-day. And there were people out there saying, we got to test this macro trend. We have to. There's no way we don't. Okay, which we could have. But you know what? We didn't. So what happened here, okay, whoops, what's all this stuff here? What happened here is we went, remember we did the Fibonacci retracements, I said, from this breakout all the way to this high right here, okay, is 25%. 25% was right here. And what does a 25% retracement mean? Okay. What it means is if that was the low and we weren't sure that was the low, that means you have a strong market. That means dip buyers came in. That means demand came in. That means you better look at some leaders, see what's acting well, look at the important sectors to see if we could continue. And if you were short, say, I just got to be a little careful. I got to measure the bounce. Remember, we talked about measuring the bounce. The bounce always tells us the validity of the prior move. Do we take back a third? Do we take back half? Does it invalidate that pressure? So these are all thoughts that we talk about, and if you read the headlines of some of the articles, this is what we try and teach you and educate you and just give you our thoughts, because it's not always right. We're never always right, but it's consistent because these cycles have repeated themselves, and I've used this numerous times throughout the course of years and years. So anyway, you go back here. So we held the 25% retracement, so it was worth covering. Wasn't worth going balls to the wall long, because who knows, we could have hit the 38.2, which was the 50-day at the time, or we could have hit the 50%. We did that a few times here. If you remember, after this move, we came all the way into the 61.2% retracement, okay, and still rallied further. Okay, during this rally, we only hit the 25%. That's why I was so fast and furious. But anyway, here is your 25% retracement. So that on the macro sense was perfect. And at the same time, okay, if you remember, okay, we talked from a macro basis, said, okay, so let's take a step back. What has happened so far? We tested the 25% Fibonacci retracement. The laggard groups, right? The Russell was a little bit of a laggard group, led us lower. The SMHs led us lower. And so did, what was the other group? The OAHs. But what did they do when we held the 25% retracement? They held their 50-day. So they didn't hold the 10-day and the 20-day. They held their 50-day, which is normal in a constructive tape. Remember, we talked about so many times that the strongest stocks hold their 10 and 20 days, and that the bulls are getting a little bit spoiled because the indices have been riding them, not just the stocks. Well, anyway, 25% retracement for the S&P, for the IWM, the SMHs, for the OAHs, they tested the 50-day. Okay, so for them, you had to see what their bounce was also. You had to see whether or not it would bounce back to support that would turn into resistance and turn lower, or would it penetrate through? So you go back to the chart of the SPX here, just so you could see like the clues of how you could have thought, or maybe just my thought process, because I'm going to talk out loud and you could relay them and write them down to your thoughts. When we then had this little bounce back day, and remember we gapped up, I said, you know, if the bears have any control, they probably do not take back this 1368 area. Because what would that mean? If we went from here to here and we went sideways below it and we couldn't bounce above it, this was like a line in the sand, right? This was a certain area here. What's this low here? This low here was, actually, no, I'm sorry, it was 1358. Okay, so 1340 to 1358. That's why I said the easy bounce, I remember, was 1350, right? Let me just envision it, because a lot, I have these, I could see things. I'm not a fortune teller, but I remember because I write them. So it would be easy bounce from 1340 was 1348 to 1352, and then the rubber match was 1358 to 1362, like that area. And the rationale was because if the bears had control, it would be a retest and it would fail. And I remember we opened up above that 1358 area, and we moved it up to like 1362 to 1364. So if you go here, right when we took back this area, go back to the chart, and we closed above the high of this wide range bar down, this really invalidated, okay, the negativity or the direction or the composure of what people were saying for a future down move. So you had to be more flexible. Okay, on this day, I do think we went back to somewhat of let's take some positions. Okay, let's not take a lot of positions, because again, we weren't sure if we were going to retest, we weren't sure how we would hold, we weren't sure how we would digest, right? Because these are all things you don't know until you see the action. But at the same time, you saw the retail group above the highs, the RTHs. You saw the Qs above the highs. You saw the home builders break out again. You saw the financials holding strong. So it gave you clues that, all right, let me just not be a stubborn short. Let me just not roll my short up and I get capitulated out today, which is what happened to a lot of shorts that had an opinion and didn't listen to the market. So this was your out, okay? If you go back to the chart, right into this day, if you were thinking short and you rolled it up, you had to get out on the second day. If you didn't get out here, okay, when we went back to the highs here, and I know it's a little resistance. Some people are probably saying, oh, I'm going to stay with this short, or I'm going to keep rolling it up. If you did, okay. But what you were already breaking some of the rules because we already took back the majority of this, so that invalidated the potency here. And then, yesterday, remember the digestion? We talked about a healthy market doesn't fall apart. It has digestion. And here was the digession. And again, talked about how if we could do some work above, I think it was 1358 to 1362, it would be constructive and positive. And we only did one day there. And then this was the level I drew this morning with Brittany, saying if we get above this level, anybody who started shorting here, 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 and rolling it up, they have some explaining to do to their portfolio managers or their investors. Anyone that was doing it as a prop trader or an active trader, you probably just got your you-know-what handed to you into this move and capitulated out today. So at this particular point, if you were kind of flat and said, I'm going to day trade, I'm not going to be as involved, that's a different story. You just make some cash flow, you don't make as much, but at least you're not fighting it and you're not blowing yourself up. So, so in this area with a 25% retracement, it wasn't like you had to be in tier 2, tier 3. You get back in tier 1 and you have some things work out. So anyway, today we busted above this high. We talked about a close above the 1378. Next level really is 1404. Well, we close at 1395. You go to this monthly chart. I went over this with Brittany today. This was the line that I drew. Actually, that's 1440, which was my goal for the year, which we're getting really close. And this was the 1404, which we closed relatively near. Okay, we've already approached or negated this potential small double top here. So now this area would be an area to sell some excitement and then see how we handle it again. See if we pause, see if we retrace, see if we retest, because we'll probably retest this 1378 at some point. But anyway, this is why we have plans in place. So if you go back to the daily, very, very clean. And then if you look at some of the stronger sectors, the RTHs were already well on their way, okay, showing relative strength, holding the 10-20 day. There you go. The home builders, which I went over with Kramer a few times, which is unbelievable. Remember right here? Look at this day. This was, what day was this? This was just so you could see leadership, guys. This was on March 8th. We were already clearing this descending channel here, showing strength in the home builders. If you go back to March 8th on the spiders, let's take, someone was in here. Take all this out. March 8th was what? Right here. So this was March 8th, and we weren't even really, we were just coming back into resistance. So the home builders were already through their highs on, I believe, the 9th, which if you go back to here, and here we go, the 9th. So that was a sign, okay, on March 9th, we've already eclipsed the high here, okay? So that should have said to you another way, if you were rolling up shorts, I better get out. Why would the home builders be at highs already if we're going to fail here and pull back down? Same way on that same day, why would the RTHs already be above highs, above resistance with nothing to the left if we're going to pull back? That's why, again, we said yesterday digestion is good. And we were leaning a little bit more to the long side versus the short side. We just didn't know how long it was going to take. And now, obviously, with this extended from the 10-day, it's hard to chase the excitement. Sell some excitement, and then we figure it out. Now, some of those weaker groups, like the IWM, okay, what did we say it did? It held the 50-day, okay? And then here was that easy bounce where you had to see if it would hold because this was support, turns into resistance. It powered through. That you got to say to yourself right there, you know what? This wasn't a retest, because if it was a retest, it would never have really poked its head through this prior support. Okay, it wouldn't have been strong enough, and then actually hold above it for then what today was, which was a nice move. And it's lagging a bit, but it's had a nice move, and the overall chart pattern looks good. But it just goes to show you how you could try things, because again, from the 50-day, if it was weak, it should not have got back above that resistance. And then you could have had your correction there. But so that was another sign to be careful, get back in some longs and figure it out. And obviously along the way, you had so many stocks on the move. Apple we've been talking about every single day. Apple yesterday gave us, that nice juicy pivot. Here you go. This was that 548.50. It didn't give you much through it yesterday, but then extended today. Nice. You want to look at it from a day trading standpoint. I talked about gaps. Remember we talked about gaps yesterday? Just way to play things, day trading. Okay, well, here you go. Apple gapped up. I happened to be lucky enough to have it overnight. Okay, pulled back, pulled back, pulled back. The futures pulled back, showed relative strength. You didn't even have to take the risk overnight. Once it had this small wide range bar here, this could have been your tier one, okay, right around 557. And then once it crossed above the opening high, right, that's another rule we have here in our education courses. That right there is a 558.30. You had a nice cash flow move. It retested, never came all the way back, retested this prior high, held, and then what happened with Apple? Look at that. So this is day trading 101, where you don't have to take the risk overnight, but you look for an entry, and here's your entry. And what it take? 30 to probably 30 to 45 minutes before that happened there. So that's, I like to give you guys a little X's and O's besides some of the macro view, where now we're at the highs, and we'll see what happens tomorrow. Sometimes what they like to do with Apple, especially on a quad witching, they push it all the way into midweek. And then what they do is now they want people to buy the 570s, the 580s, the 600s. And then remember the last time on that Wednesday is when they had the cute pull-in. So this way the option dealers could pull it in, suck out some premium, and make money on both sides. And that actually happened right here. You look back at the chart. This is when it pushed through. I remember this earnings play, traded along versus the gap. Here's where you bought it. Then it started going parabolic into that reversal, I believe, on it was right here on that Wednesday, because everyone was buying the calls, came in option registrations that Friday. Then everyone started buying the puts, right, below 500. So, below 500, that's what they wound up doing. Came back up and closed right at 501. So they pushed it up, had everyone buy, calls, pushed it down, had some buy some puts, closed it in the middle, and then there you go, option dealers win, and then it resumed. So, who knows what the case will be with that if it's the same, but a quad witching, there's even more vested interest at heart here. So we'll see if it trades through here. I'm long a little bit, extend a little bit further, make people buy the 580s, the 600s, then who knows? Maybe it comes back down and retests this breakout and closes at 550 for quad witching, but we'll see. And then just other movers. And Google hasn't been spoken about that much because it's just in a range. Again, I'm not even going to really get into it. Like we talked follow through, that Friday, remember, was weak, and then it regrouped. So if you were trying to play this short and this happened, you had to cover, and now it's right back into this channel here. So maybe it starts getting better as a macro investor. If you were long into the earnings, because that's what you do. Here again was that buyback, and now you just sit and wait. And I do think at some point it's going to break above the highs of the year. It's fine. Baidu looks interesting. It was a little tough today to trade. I was long and it couldn't really bust through this downtrend, but that's where resistance is. So it has to have a lot of volume to bust through. But it tried again here, held higher. So I would say as long as it stays above 138, there's a very good chance that it busts through this 141 to 145 for an additional move. So that's on the radar still. Look at this reverse head and shoulders, maybe left shoulder, head, right shoulder, bust through. So we'll see what happens there. Microsoft, Intel, those guys are still moving higher. If you stay with them, great. We've talked about them many times. And then we focus on the banks. I got to say, Sperling had a great call. He hasn't done a video in a while. He told me this morning, I'm going in there and I'm going to do the banks. I'm like, okay, go in there and do the banks. We've been talking about them a lot. Talking about how JPM's the leader. Talking about the 3-day inside range in Goldman Sachs. Went over that with Brittany today and how it can get going. I didn't expect today's move. And then we talked about the channel in Bank of America. There you go. JP Morgan extended. Wow. I was not long this one today, but if you were, congratulations. This one's been trending higher and broke out in wide range bar. You go now to, wow, it busted through this entire area. That is powerful, guys. But again, look where it came from. You don't want to chase this type of move. And I had some of my guys ask me about it, and I said, if you're in tier 2 or 3, sell some. Get back down to tier 1. It cleared an area. But this stock was also making higher highs. It showed you that it was ready for power. Okay, before the spiders even decided to make new highs, right? This was here, just a little relative strength lesson. Okay, as far as the banks, this high here was set on, what was the date there? I'm so blind. March 2nd, okay? March 2nd was the high at JP Morgan. If you go just see the spiders, just to see the relative strength versus spiders, this is what? Probably March 2nd, right? March 2nd, March 29th, I'm sorry, that was my blindness, okay? Actually, wait, no, here it is, March 2nd. So JP Morgan was at a high even and the market wasn't at a new high, okay? And then JP Morgan made a new high, right? Look right here. This was, I have to make this bigger. This was like the 9th, I believe. And if you go back to the spiders, 3 days ago, it was not even above the high here. So that just showed you how it wasn't even waiting for anybody. JP Morgan's like, I am getting going. I want to make new highs on the year on the move well before the market. So obviously when the market went, okay, JP Morgan extended even further. Look at that. That's alpha, guys. And then as far as catch-up trades, this morning we talked about Goldman Sachs, said there's a nice little inside range here. Okay, obviously we've tried to play it a few times and it was very choppy, and I actually didn't go back to it. I'm a little disappointed in myself. I didn't trade it once today because remember this happened, I traded this day, I bought here, and I got stopped out, and I'm just like, I'm done with Goldman Sachs, and I actually should have went back to it. So today, I was the offensive coordinator, and I said, above 1870, above this inside range, it could get going again. And look what happened. Sometimes you just do a play, and you can be pleasantly surprised. You don't have to always know the outcome, but they say, what's luck? Is it when preparation meets opportunity, right? Is that the phrase? I don't even know. Again, I'm off the cuff here, guys. There's no teleprompter. I'm just going on with telling you guys what's in my mind. That's why sometimes it's a little raw, and I don't come up with it. Like even when I type on Twitter, sometimes there's spelling errors, sometimes there's grammar. You know what? I have like 8 monitors. I have my phone going. I have traders going. I have the media going. I have my own P&L going. So take it take it like it is. It's Red Dog in the raw. But anyway, you go back to this chart, and if you bought above 1880 and you trailed it, you had a really nice move here in Goldman Sachs, unexpected. Then you go back to like one of the leaders, Wells Fargo, pow. This one also. You guys remember we drew this support here, and actually it was off the charts. Said buy this into the moving average, and there you go. Even if you didn't, once it cleared this 32, you had a nice day trade today. I don't know why. I focused on Bank of America, and Bank of America was lagging a bit. The price for me was 820, 825, and then when I saw that Bank of America passed the stress test, I just shift B, shift B, shift B, shift B. I took thousands upon thousands of shares at like I think 28 cents and 30 cents, and it wound up being a good trade. And actually, it made me some nice money. It wasn't a blockbuster, but nice little pattern here, guys. Right? Nice sideways channel, held higher. Reason why I started buying, because I knew in my head that 825 to 830 was the level, and it closed at 849. Percentage-wise, probably just the same percentage. You just had to have a lot of shares in order to make money here. And so, rightly so, nice breakout. And remember, we talked about this being the new year target, somewhere around here, 950 to 10. So the banks were the focus, and you have to have a plan, and the market confirmed it. As far as some of the donut stocks or the caffeine stocks, Starbucks, talked about doing some work in here. Remember we drew this little flag? Well, here it is. The flag's almost complete, and it should be breaking above this to continue. Dunkin' Donuts, I've been long and pounding the pavement since last week. Look at this nice move. It said put it in your IRA, put it in your drawer, and see what happens. This was the breakout above this descending trend line. Here it broke above this resistance. Then it tried to consolidate, and now it closed above the IPO high. So, it could retrace a little bit, but overall I think that this one has a long way to go. JVA, guys reversed on this one today, rightly so. It had 3 big days. So now you have a little bit of a red dog reversal or a push through, closed below, market rallied, and this didn't. So maybe this has a short play. So see, you can make some money short. I know Sperling was focusing on this on the short side. He reshorted it with the red dog reversal at $13.99. It closed at $13.27, 70 cents with the stop here at the high of the day. Not so bad, and probably comes into around 12. And then talk about the casinos. My voice a little scratchy. We talked about last Tuesday buying them back, right? After we sold the strength, and either actively trading them or buying them back and trailing them. And if you look at LVS, nice little move here, guys. This was the descending trend line that got broken. And then if you want to take a closer up look here, this is what we were talking about. This was that one little reversal here at the highs. That's when I got flat. Bought back a little bit into support. Made sense, right? A little risk reward, not so bad. Filled the gap. I actually sold it there. Tested a little short here. didn't make money on this day. I made that back and then some. And then I said if we could start crossing back above 55-ish, 55.5, the momentum's coming. And then I drew this line saying, it's back in vogue to break above this macro trend, and it's on its way. So you could have got flat, made a little bit of money for cash flow, made a little bit of money short. And even if you came in flat today, made some cash flow the other way. So, pick and choose your battles, pick and choose your time frames, a lot going on. And if you didn't sell this because you're like, you know what, Red Dog said 65 on the monthly chart, because that's what I did say, and people were saying, why are you selling it? Because I can, and I'm a professional trader. But the real target here on this move is this was one area. And then, but the measured move from, actually it's a lot higher than that, but talked about resistance up here. And I said to these people, listen, if you don't think you're going to be able to rebuy it back and trade it, just sit through what has been a little bit of a move lower. It's fine. You didn't sell perfectly at 57, and you're not going to buy back perfectly at 53.5. And it's only March, and the year target is 65, so you have a long way to go. Just sit. But that goes with, again, know your time frame, know what you're looking to get out of these things, and accept it and be accountable for it. Win also, nice day today. You look at the daily chart here. It's just, it's kind of rounding. It looks okay. It's got a double top in front of it. It's going to take some time, but really on the daily chart, this was a nice trade also, guys. Remember, this was when it broke above, gave you the move to resistance quick. So we said get out there, quick move lower, buy back. I have a video. You look at it with Jill Malandrino from Options Profits. The strategy was to buy back here with the stop below 118, and if you did so, look at the move here on the chart of win. Not so bad, right? Now back above 125. And you're in there and the motion can continue. But again, you have to know your time frame, know what your risk tolerance is and what you're willing to hold. So that's casino. So if you come back to me, you also know that gold's been a little tricky. I haven't really been as active in it, and rightly so. Today was a pretty brutal day for gold. I would say a lot of people are actually pretty prepared to try and short gold into the Fed, and I didn't think it would be that easy. And if they did, they got paid. And now, if you were playing this for a potential inverse head and shoulders with the left shoulder, the head, the right shoulder, this just negated, this entire move here. So it invalidates this potential plan or potential strategy if we were to break below and close below, just say this 161.43. So it's fine. If this was your plan to accumulate as this in the right shoulder and then it breaks, get out, take a loss and admit that you're wrong and move on. But if you said, oh, I know gold is going higher, I know gold's going to 2,000 and it breaks below this area, you're going to be holding on and you may not ever be right because you're just going against the trade. But anyway, this is the line of the sand there. Even like with Zynga today, Zynga I've been trying to hold, and remember I talked about concept play. It's been a little weaker. Well, today they announced a secondary. My price was $13.40. If it breaks below, I'll get out, and they stopped me out. So I lost Zynga today. I lost money, and I said, who cares? It's one trade within 8 to 15 to more of them. You're going to have losses, but if you don't manage them the right way, you're not going to make any progress. Then we talked about LinkedIn. Nice looking chart, right? Nice little cup and handle we talked about. Wasn't as fast as everyone would like, but here is where it ignited. That was your first buy, held in there, and closed pretty strong today. I'm still long some. Let's see if we can clear this area for some more action. I think someone reported a lot of calls being bought on the 100s and 105, so maybe it continues. I know we've all complained about IBM, but all in all, you take a step back, might have traded like you know what, but this is when we started buying it. Here was your cash flow trade. And then it consolidated again, another cash flow trade, and then it inched, and then today, you could have sat in it, and I think I tweeted saying, it would be nice to see IBM 203 to 205 today. It closed at 203.78. So as an investor, again, stock picker, you've gotten rewarded here for the last decade, and as someone who, like me, hasn't held it for a decade, it's been a nice little 2 month stock to maneuver for a hold and some cash flow here and there. Not a barn burner like an Apple or this or that, but they all can't be that. So again, lots of different things going on here. You have to pick which one you want to do. So I have my partner meeting tonight, and I also have to run in Central Park with my team. Boston Marathon's coming up April 16th. But anyway, what I just want you to do is I want you to take a step back and really look at how you've maneuvered the market. Whether you want to go back 6 months, whether you want to go back the last 2 weeks, whether you want to go back the last 3 days, whatever it is, go back and figure out how you handled it. Were you stubborn? Did you act out on your plan? Did you actually maybe excel and do well? And if you're happy, congratulations. But if you're happy, don't loosen up. Don't let your highs get too high. In the same way you don't want to get your lows too low, because you'll start to slip and you'll forget what got you to where you are today to be successful. You can never get too excited, because that's when you trade too many shares, too many positions, and then you go out of your little comfort zone. So there's a lot to do, obviously. So all in all, reflect. And just be excited that there's going to be a lot more movement moving on. If you've sat through this whole video, which I commend you for doing, because I don't know how you can, that means you're really looking to learn and you're interested in learning, so you're taking steps in the right direction. So I applaud you. And just be opportunistic. It's good to be a realist, but it's good to have glass half empty versus half full. And I know misery loves company, but misery gets you nowhere. Enjoy life. Someone said to me one time, enjoy life, you're dead a long time. And it's kind of true. So figure out what makes you happy and do that. Figure out what you're good at and do it better. And figure out what you're bad at and try and take accountability for it and work on it. Scott Redler, T3Live, the recap. Have a great night. I'll see you tomorrow.